Okay, so you might have seen the headlines recently. Some pretty big news about King Power and Airports of Thailand, or AOT as they're usually called.
Yeah, big news indeed. King Power apparently asked to cancel their duty-free contracts.
That's right, at three key airports: Hat Yai, Phuket, and Chiang Mai.
And the immediate impact on AOT's stock price, well, it was pretty dramatic.
It dropped fast and hard.
Yeah, that news definitely grabbed the market's attention. It really shows just how important these concession deals are.
For everyone involved, right? Not just Kim Power running the shops, but, I mean, for AOT's own financial health, their valuation.
Absolutely. So for this deep dive, we've gathered the source material, the news reports covering this request, and importantly, a specific financial analysis from Maybank Securities.
And we're going to really unpack what's going on behind those headlines for you.
Yeah, our mission is to get past that initial, shockwave from the news. We want to understand the actual details of these contracts.
The nuts and bolts, and explore why this is happening right now.
Exactly. And also look at what AOT had already done because they were aware of King Power's financial pressure.
Right, and then see how the market, through the eyes of analysts like Maybank, is reacting.
And finally, sort of try to figure out what this all might signal for AOT going forward.
Okay, let's dive in. The main event, the core news, is King Power submitting a formal letter to AOT.
A letter asking to negotiate canceling those duty-free contracts.
Specifically for Phuket, Chiang Mai, and Hat Yai airports.
And this news hit the public around June 13th, 2025, or 2568 in the Thai calendar year.
And the market reaction was, well, instant and pretty sharp.
It really was. One report mentioned AOT's stock falling by 7.8%.
But by the end of that day, June 13th, the final number was even steeper, wasn't it?
Yeah, confirmed down 9.38%. That's a significant drop for one day.
It really is. And that wasn't just like a percentage on a screen. Reports say it wiped off something like THB $36 billion in AOT's market value.
Wow. Yeah, that's a huge amount. It clearly signals just how worried the market got about the potential fallout from this request.
So let's talk about the contracts themselves, because these aren't just any agreements. The sources mention a specific one, contract number, DF1022562.
Right. Dated July 4th, 2019, so pre-pandemic.
And the original terms were pretty long-term.
They were set for 10 years and 6 months, originally meant to run from late September 2020 right through to March 31st, 2031.
And the initial way AOT made money from this was a minimum guarantee, right? The same Correct. For that first year, the minimum guarantee was set at THB 2,331 million.
Over 2 billion baht. And things changed, didn't they?
They did. The contract was actually amended twice. And the latest end date got pushed out even further.
To when?
March 31st, 2033. So it's an even longer deal now.
Okay, and crucially, the way AOT got paid changed significantly.
Because of COVID.
Right, exactly. That fixed minimum guarantee just wasn't workable when airports were, practically empty.
So they shifted to what they call a sharing per head model.
That's right. Under this model, AOT collects revenue based on the actual number of passengers. They get THB 127.30.
For every single passenger.
For every departing, transit, and arriving passenger at those specific airports. It was a way to link payments to the actual, albeit drastically reduced, activity.
A lifeline, essentially, during the worst of the pandemic.
Definitely.
Okay, so if they changed the payment model and even extended the contract, why does King Power want to negotiate cancellation now? What reasons did they give in their letter?
Well, they listed quite a few factors, mostly broad economic challenges.
Like what specifically?
Things like the general economic slowdown, a notable decline in Chinese tourists, which is huge for Thailand, ongoing trade wars, trade barriers.
And just a general slowing of the global economy.
Right. And they basically framed all these external issues as force majeure events.
Meaning things totally outside their control.
Exactly. Events that weren't their fault, but which, they argue, significantly hit their sales and operations, made it hard to run the business profitably.
So their core argument boils down to the payment rate, even the per head one, is just too high now.
Yes. They use the phrase, the duty going, basically higher than it should be, given the current tough reality they're facing.
And did they provide any numbers to back that up?
They did. They explicitly stated they're experiencing losses.
Yeah.
Contracts got called directly because of this financial burden.
Any specific figures mentioned?
They mentioned a loss of THB 651.5 million for the year 2023, which is 2,566 BE. And they also indicated that those losses continued into 2024, or 2567 BE.
So they're saying they're losing money hand over fist because of these contract terms.
That's their claim. And because of this, they also stated that they feel AOT hasn't really fully worked with them to resolve these issues mutually.
And so they asked for a formal negotiation period.
Yes. Requesting a resolution or try to end within 45 days.
Okay, so Kim Power's painting a picture of external pressures making the contract unsustainable. But, as you hinted earlier, this wasn't the first AOT had heard about King Power's financial difficulties, was it?
No, not at all. AOT had actually already taken some steps before this letter arrived.
What had they done?
Well, back in 2024, AOT had already approved a request from King Power Duty Free, KPD, to defer minimum guarantee payments.
Okay, so not cancel, but postpone.
Right. This applied to 12 monthly payments, the ones originally due between August 2024 and July 2025.
And they pushed them back. By how long?
By 18 months each. So a significant deferral period.
And did AOT just take King Power's word for it that they needed help?
No. The sources say AOT actually looked into KPD's claims. They verified that, yes, the minimum guarantee was very high compared to the revenue being generated at the time.
And that sales targets weren't being met.
Correct. They confirmed the basis of KPD's request for relief.
And was this just special treatment for King Power or part of a bigger picture?
It seems it was part of a broader AOT response. They actually had an approved project from January 2025 designed to help many of their concessionaires.
Oh, really? So others were struggling too?
Apparently so. Over 70 concessionaires were facing similar liquidity problems because their minimum guarantees were way out of whack with the revenue sharing they were actually generating for AOT.
So AOT set up a formal deferral program. What were the terms?
It wasn't a free ride. Concessionaires who got deferrals had to provide collateral.
Okay, security.
Yes, and they had to pay a penalty interest rate initially set at 18% annually.
Wow, 18%.
Well, it was negotiable downwards, but apparently not below the bank's minimum lending rate plus 2%. So still a significant cost.
And they had to pay monthly interest on the deferred amount, too.
Yes. And the maximum deferral period allowed under this program was 24 months.
So AOT's public position through all this is what exactly?
They've maintained that they haven't technically amended the core concession contracts themselves. The underlying agreement stands.
They see these deferrals as operational assistance, not contract changes.
Precisely. They argue their actions follow good governance rules. And, importantly, they believe that approving these deferrals, even with the complexities, is actually better for AOT financially.
Better than what?
Better than terminating the contracts and trying to rebid them in the current uncertain climate. They think that route would likely result in lower overall revenue for AOT in the long run.
Okay, that makes sense from their perspective. All right, so that covers King Power's side and AOT's previous actions. Now let's pivot to the financial markets reaction, specifically through the lens of that Maybank securities analysis.
Yeah. Maybank put out a report pretty much concurrently with this news breaking. And their assessment was, well, quite stark.
Stark how? What was the headline takeaway?
They dramatically changed the recommendation on AOT stock, from a BUY all the way down to a sell.
Wow, that's a major shift. And the target price?
Flashed almost in half. They cut their target price from THB 75,000 down to THB 42.0.
Ouch. That sends a very strong signal to investors. Why such a drastic change? What were Maybank's main reasons?
They listed several key factors. A big one was the cash flow pressure they see building up related to King Power.
Okay, how so?
They specifically pointed to that decision AOT made to extend the credit terms for King Power's payments, those ones due from August 24 to February 25, by that full 18 months.
They saw that as a red flag.
They interpreted it as a strong indicator that King Power is facing a serious credit crunch, as they put it.
And did they have numbers on overdue payments? Because AOT had already acknowledged KPD was struggling.
Yes, Maybank cited specific figures. They noted that as of AOT's first fiscal quarter of 2025, AOT's balance sheet showed THB 5.7 billion in non-current trade receivables.
Okay, what does non-current trade receivables mean in plain English?
Basically, money owed to AOT that's significantly past due. And the crucial part, AOT management apparently indicated to Maybank that over THB 4.0 billion of that 5.7 billion.
Let me guess.
Was overdue specifically from King Power.
Wow. So the vast majority of AOT's seriously overdue payments were tied to this one concessionaire. That's concerning.
It absolutely is. And Maybank's concerns didn't just stop there. At the current situation, they looked further out.
To the future, after this current concept.
Exactly. They expressed worry about the uncertainty after the current concession ends in fiscal year 2033. They questioned AOT's ability to maintain that same high level of cash inflow.
From King Power or whoever takes over, right?
Right. Will King Power themselves, or maybe a competitor like Lotta Duty Free, who apparently offered less than King Power back in the 2019 bid, be willing or even able to offer those same kind of really high minimum annual guarantees, or MAGs, in the future?
That's a huge question mark for AOT's long-term revenue model.
It is. Maybank even ran some numbers on sensitivity. They estimated that if the future MAG effectively dropped by just, say, THB 20 per passenger compared to current implicit levels, that alone could shave off about 3.7% from AOT's earnings.
So even small changes in future bids could have a noticeable impact.
Definitely. And then there's the other side of the equation, spending.
Ah, yes, the expansion plans.
Maybank explicitly factored AOT's massive capital expenditure, the CapEx, into their valuation model. Specifically, that THB 140 billion plan for the new South Terminal at Suvarnabhumi Airport.
Which is a huge undertaking.
Huge. And all that spending really relies on having steady, predictable income streams. The King Power situation kind of throws a wrench into that predictability, doesn't it?
It certainly makes the analysts nervous. So for Maybank, it's this combination: current credit crunch signs, future revenue uncertainty, and massive upcoming spending.
That's the core of their downgrade, yes.
Right.
It's a confluence of factors raising red flags.
Okay. Looking beyond the immediate King Power issue, did Maybank's report touch on AOT's broader outlook? Other factors influencing their forecasts?
Yes, they did. They actually revised down their overall core profit forecasts for AOT for fiscal years 2025 and 2026.
By how much?
By 11%, which is a decent chunk.
And the reasons for that revision?
They pointed to a couple of things. One was a slower than expected recovery in Thailand's domestic economy.
Okay, less domestic travel and spending.
Right. And also lower revenue coming in from AOT's other concessions, the non-duty-free ones, like retail shops, restaurants, etc.
So it's not just duty-free feeling the pinch.
Apparently not. They projected an overall decline in AOT's total revenue by about 3–4% for those fiscal years, 25 and 26.
And costs, are they going up?
Yes. They also factored in increased operating costs, things like higher employee benefits and needing to hire more staff for the planned airport expansions.
So potentially lower revenue and higher costs, not a great combination.
Not ideal, no. But they did identify some potential upsides for AOT down the road, though maybe not immediately.
Oh, like what?
One possibility is AOT is starting to collect passenger service charges, PSCs, from transit and transfer international passengers.
They don't do that currently.
No, but many other major airports in the region do. Maybank expects AOT to complete a study on this by July 2025.
And if they implement it?
Potential implementation could be around mid-fiscal year 2026. Maybank estimated this could boost AOT's core profit by maybe 2–4% in FY26.
Bringing them more in line with places like Malaysia and Singapore on that front.
Exactly. Another potential plus they mentioned is higher concession revenue from new ground handling and cargo operators at Suvarnabhumi.
AOT is bringing in new players there.
Well, AOT's own subsidiary, called AOTGA, is expected to start operations there around October 2026.
Ah, keeping it in the family, potentially.
Potentially adding, they estimate, maybe a 1–4% upside to AOT's earnings in fiscal year 2027.
Okay, some potential bright spots, but maybe a bit further out. Let's just circle back to the scale of AOT's spending plans for a second. That THB 140 billion for the Suvarnabhumi South Terminal, is that the whole picture?
No, that's just one, albeit massive, piece.
Yeah.
It's part of AOT's revised 10-year master plan for developing Suvarnabhumi, running from 2025 to 2035.
And the total investment for that whole plan?
Could be in the range of THB 160 to 170 billion. So we're talking huge sums of money.
And the goal of that South Terminal specifically?
It's designed to handle an additional 70 million passengers per year, which would more than double Suvarnabhumi's current capacity.
Wow. Okay, so the ambition is enormous, which, again, highlights why that steady concession income is so vital.
Absolutely critical.
Did Maybank flag any other risks for AOT beyond the King Power situation and the CapEx burden?
Yes, they did. One key external risk is the ongoing sluggishness of the Chinese economy.
Because Chinese tourists are so important for Thailand.
Crucial. A slow recovery there directly impacts passenger numbers. Another risk they mentioned is the possibility that AOT might find itself needing to provide more financial assistance measures, maybe to other concessionaires who are still struggling.
So the KPD situation might not be the end of it.
It's a possibility. And they also noted the potential impact from the government's policy change to permanently remove those duty-free shops on arrival.
Right. That was meant to boost domestic retailers, wasn't it?
It was. But it could also potentially reduce overall duty-free spending captured at the airport.
Okay. One slightly different angle did the report touch on ESG. Environmental, social, governance factors.
Yes, briefly. Maybank actually gave AOT a pretty positive assessment on that front. They rated AOT's ESG profile as low risk and generally above average compared to peers.
What kind of things did they highlight?
They mentioned AOT's efforts in areas like noise reduction around airports, managing air and water quality.
Environmental stuff.
Right. And AOT's targets for carbon neutrality by 2030 and net zero emissions by 2032. They also noted good governance practices and social contributions, like providing scholarships.
So from an ESG investment perspective, AOT looks relatively solid according to this analysis.
Yes, that seemed to be a positive point in the report.
Okay, so let's bring it back to the valuation then. Maybank slashes the target price, downgrades to sell, clearly driven by the King Power credit worries, the uncertainty about future concessions post-2033, and that huge BKK CapEx plan weighing on things.
Those are the main drivers they cited, yes.
How does AOT's stock valuation look compared to other airport operators in Asia?
Well, at the time of the report, AOT was trading around 31.9 times its expected earnings for 2025. The average for its Asian peers was slightly lower, about 30.6 times.
So trading at a slight premium, does Maybank think that's justified?
Interestingly, they pointed out that AOT is actually more profitable than its peers right now. Its return on equity, or ROE, is about 16%, whereas the peer average is only 5%.
Okay, so it's generating better returns. Shouldn't that warrant a higher valuation?
You might think so. But Maybank's view was that AOT should probably trade more in line with its peers, despite the higher current profitability.
Why is that?
The main reason comes down to growth expectations. Maybank projects AOT's earnings per share, or EPS, to grow by maybe 15–21% over fiscal years 25–26.
Okay.
But its Asian peers are expected to see much higher growth rates, somewhere in the range of 38–52%.
Ah, I see. So even though AOT is profitable now, its future growth prospects look less exciting to analysts compared to others in the region recovering faster or expanding more aggressively, perhaps.
That seems to be the logic, yes. Lower expected growth tempers the valuation premium.
Still, despite all these challenges, the downgrade, the uncertainties, AOT's core position is pretty undeniable, isn't it?
Absolutely. It remains Thailand's dominant player in airport infrastructure, a near monopoly operating the 6 key international airports that handle, something like 80% of the country's total air traffic.
That fundamental strength, that strategic position, provides a very solid foundation.
It does. But it's also clear they are navigating some really complex financial headwinds right now, largely stemming from those global disruptions like the pandemic that hit their key partners like King Power so hard.
So wrapping this all up, what does this really mean for you listening in? Maybe you travel through these airports, maybe you follow the Thai market. We've kind of gone on a journey here, haven't we?
We have. Starting with that attention-grabbing headline, King Power asking to cancel contracts.
And we've traced it all the way through, seeing how that single event connects to the fundamental financial health of this huge publicly listed company, AOT.
How it impacts their massive, multi-billion BAT future development plans.
And how sophisticated investment analysts are trying to weigh all these factors to predict AOT's future value.
I think the whole situation really paints a vivid picture of the incredibly delicate balancing act airports like AOT have to perform.
How so?
Well, they're caught, aren't they? Between needing to support their key business partners, their concessionaires, when they face massive external shocks like AOT try to do with those payment deferrals.
Right, trying to keep them afloat.
While at the same time, needing to protect their own financial stability. They need that strong balance sheet to fund these absolutely essential, enormous investments in future capacity, like that new terminal.
It's a real tightrope walk.
It is. And it just shows how these big global shifts, economic slowdowns, trade tensions, pandemics, can ripple through the system and have really deep, complex, long-lasting effects.
Playing out in these crucial business relationships between the big infrastructure operators and the companies that rely on them.
So maybe here's the final thought, the really interesting question to ponder. When you think about the airports you use, does knowing about these behind-the-scenes financial pressures and global factors change how you see them?
And looking ahead, how do you think this constant tension, the need for airports to balance keeping their tenants viable during tough times against funding these huge necessary expansion projects, how might that ultimately shape the future of air travel, your experience at the airport, maybe even the cost of your next flight?